Starting August 1, over 1,000 stocks will not be eligible for acceptance as collateral for margin funding. In a recent circular, the National Stock Exchange has tightened the list of securities eligible as collateral for margin funding, which is used in intraday or derivatives trading. Of the 1,730 eligible securities, NSE clearing has removed 1,010, including notable companies such as Adani Power, Yes Bank, Suzlon, Bharat Dynamics, and Paytm. Starting August 1, the exchange will accept as collateral only those securities that have been traded at least 99% of the days over the last 6 months and have an impact cost of up to 0.1% on an order value of ₹1 lakh. Now, this is something we all have been reading about for the past week, but here's what it actually means. To understand this, let's start with what Margin Trading Facility or MTF is and why investors pledge stocks as collateral to secure their margin funding. Now, MTF lets investors buy shares with only a portion of the total cost, similar to the buy now, pay later method. They invest a part while the broker loans the rest, charging interest. It's a loan using purchased securities as collateral, enabling leverage in their investments. For example, if an investor wants to buy 1,000 shares of a company that trades at ₹100 per share, the investment amount required would be ₹1 lakh. With MTF, the investor can pay only 30% of that amount, while the broker funds the remaining 70% with an interest rate. Now, MTF helps investors buy more stocks that they can afford by borrowing funds from brokers. These borrowed funds are secured against stocks purchased or other securities in investors' account. So why investors pledge stocks as collateral? Number 1, to leverage their investments and trading with more capital than they have. Number 2, to maintain liquidity without selling their holdings. Number 3, accessing cost-effective borrowing, particularly with low-risk securities. And number 4, for seizing market opportunities swiftly. However, if the value of collateral drops, investors may need to add more collateral or sell positions to meet margin requirements. Now, which stocks are included in NSE's list? Earlier, around 1,730 stocks were eligible to be pledged as collateral, but the new list eliminates 1,010 stocks in a phased manner. This includes well-known companies such as Adani Power, Yes Bank, Suzlon, Housing and Urban Development Corporation, Bharat Dynamics, Bharti Hexacom, IRB Infrastructure, NBCC, GoDigit, Tata Investment, Paytm, Inox Wind, Jupiter Wagons, KIOCL, Tejas Networks, among others. Now, how does NSE plan to remove unapproved collateral? To provide transactional support to clearing members for replacing the unapproved securities, the National Stock Exchange will progressively raise the haircut. The progressive increase in haircut percentages from August 1 to November 1 will result in gradually phasing out the use of certain securities as collateral, making them less attractive over time. The initial haircut applied to the unapproved securities will be 40% or the value at risk, whichever is higher. This will increase to 60% from September 1, 80% from October 1, and 100% from November 1. Finally, what is the need for this measure? The overall aim of these changes is to ensure that only highly liquid and stable securities are used, reducing risks for exchange and investors. These decisions aim to improve liquidity by including frequently traded stocks, enhance market stability by excluding volatile stocks, strengthen risk management by focusing on low-impact cost securities, protect clearing members and investors from potential losses, and lastly, to align with regulatory goals for market integrity and security. That's all in this video. Thank you for watching.